Today, we're going to go over one of the tools that has helped me completely change my trading game and really move into more of the profitable side of the market, which is using a trading simulator to practice my trading strategies, practice my risk management. And this is something that I host on my YouTube channel live as well for everyone to come together and also take and practice their trading strategies and their risk management strategies with me as well. So today we're going to go over what is a trading simulator, the benefits of using one, the disadvantages of using a trading simulator, and I'll share some tips that have helped me in my trading journey as well. So let's start off with first, what is a trading simulator? A trading simulator essentially mimics the real financial markets and it allows you to practice trading with virtual money. So it helps investors to practice their investing strategies and their risk management and also really understand what has happened in the past in the financial markets and use that to their benefits because as we know, if you have ever opened up any sort of assets technical chart, you have seen how there are a lot of similar patterns, and you essentially can use a simulator to understand how you would catch a trade using the same exact pattern. These platforms are going to simulate stock, crypto, forex, any essential security that you want to trade. There's a simulator out there for it, and it offers real-time data and market conditions where you can practice without again risking any of your real capital. It's ideal for beginners but also experienced traders who want to test out either a new security, new type of asset. So if you've always been trading stocks, you want to get into Forex, then there's a simulator that you can use for Forex trading. If you want to get from Forex to stocks, same thing. There's a lot of stock simulators and a lot of simulators out there for crypto as well. It is also a bridge to real trading. So a stepping stone towards actual real trading where you can build enough confidence to make informed decisions when it comes to trading or investing. You gain some practical experience through this as well. So it's going to give you a chance to gain some real world experience without the pressure of real financial risk. So as soon as we go ahead and invest into any sort of financial market, as soon as you buy a stock or you invest into any sort of currency, there's always that emotional roller coaster. So a simulator really helps you eliminate that part and then go in and practice your strategy and practice your risk management without any sort of emotional roller coaster. So we've already tapped into a little bit of it, but let me go in depth with what are the benefits of using a trading simulator. You're not risking your own capital, so risk-free learning. You can practice your trading skills without the fear of losing any actual money. You learn about the financial market. So again, if you've always been trading stocks and you want to learn about the forex market, then you can use a simulator to go ahead and learn risk-free about the forex market. If you never traded stocks, if you never traded forex, if you never traded crypto, but you're just starting your trading or your investing journey, another great opportunity to go ahead and get started without any sort of risk, any sort of emotional roller coaster. And you can practice different trading or investing strategies. So if you're someone, for example, if you've been trading forex or stocks or crypto and you've been trading, one particular trading or investing strategy, which is, let's say, for example, break and retest, and you want to get started and learn about how do I take impulse entries. You want to take advantage of impulse entries because you've seen massive movements that have happened in the market in the past couple of weeks or months when there's huge economic data or news coming out. So you can practice that. You can practice, if you want to do break and retest, if you want to practice with a specific type of indicator, for example, you can practice trading new assets or securities. Again, hopping from, GBP, JPY, and Forex, and now you want to incorporate trading US 30, or you want to incorporate trading gold, or if you want to incorporate trading oil, or if you want to move to completely a different financial market onto stocks. If you want to move into crypto, great opportunity to start using a Forex or a stock or a crypto simulator and start practicing your skills there. Also helps you boost confidence. So it's going to build your confidence in the decision making before investing any of your real money. Get a feel for market fluctuations and understand trading patterns without any real stake. So if there's massive, NFP movement that you have seen in the past couple of weeks or so, and also with the US presidential elections and a lot of things that have been happening in the Middle East, geopolitical tensions, and you have seen how the market has reacted to it and the massive fluctuations, and you're trying to understand, how do I catch a move like that? You can go back on these simulators and you can practice using that real market data, right? And how the market has, set up for that weeks, months, days, hours before that move happened, and how can you catch the same exact movement when there's similar fundamentals are about to come out, or even after that, when the market starts with the massive fluctuations, breaking top wicks, bottom wicks, comes back out into a consolidation, and you're trying to understand that how do I catch a move as soon as price breaks out of consolidation. You can test out all those things as well. Now, what's the disadvantage of that? You don't have any emotional involvement. So as much as we want to practice our trading strategy, as much as we want to practice our risk management strategy, as much as we want to get a feel for the real market, at the end of the day, for a lot of people, it's stuck in the back of their mind that there's no real money that's involved in this trading. So you can turn off that simulator, come right back, and depending on the type of simulator that you're using, you can refresh, right? And you're sitting right back at the amount that you had started with. So it's also very important to really treat the simulator as if it was a real life market and you were actually investing in that market, right? So making proper informed decisions. Financial markets are all about data. So instead of coming in with any sort of emotions, come in and try to understand what are the data points and what's the market telling you, where is it headed from a technical perspective, from a fundamental perspective, and try to make decisions based off of that. Even overconfidence. If you have experienced a lot of success in a simulator, it can lead to unrealistic expectations in real trading. All of that comes from treating it like the real markets, right? Every day you come onto the charts, it's going to be something different. You're not going to see the same exact pattern setting up, 4, 5, 6, 7, 10 times in a row. There's going to be different variations of that. So understanding that, you're using the simulator to understand what is the next possibility and how do you take advantage of that and the different variations of the trade setups. Also, risk management. You can have limited learning of risk management. You might overlook the importance of actually managing your risk since there's no real loss involved. So a lot of people, instead of placing any stop loss, or actually placing a TP, or learning how to manage their stop loss, moving to break even, trailing the stop loss, they can overlook the importance of risk management. It comes back to the first point of no emotional involvement, developing that overconfidence, and just thinking that this is not real money, so then you're just taking trades left and right. So that is one disadvantage of the simulator. But again, the more that you treat this like actual real trading, the more benefits that you're going to get out of this. So some tips that I have learned in my trading journey and also using the simulator is that you want to treat it like real trading. Approach the simulator as if it was your real money and you're going to build proper habits that way. You want to track your results. Like I said earlier, financial markets are simply data. So monitor your success and your failures and refine your strategies that way. Look at your wins, look at your losses, go back and look at the trades that you have taken and look at where did you essentially go wrong? You can also use an accountability buddy. So if you have someone who is trading with you and has experienced a little bit more success than you have, they can come and they can take a look at your trades. Have a mentor. That's another great opportunity to turn to someone who's a lot more experienced than you and has a lot more success than you, who can help you out, and they can also help you track your results as well. Set realistic and achievable goals. Start off small. So a lot of people, when they come into the simulator, again, goes back to the first point of no emotional involvement, just thinking that, this is not real money that's on the line. They set very unrealistic expectations. If you have $100 account, you're not going to scale that up to $100,000 account within a month if you have very limited trading experience and you have not experienced success in the past as well. So start small, begin with small stake trades to understand the flow of the market before diving into the high stake scenarios. So start off with, penny lots or 10-cent lots, and then go up to 50 cent, a dollar, $10, $20, and set clear, defined objectives. So making consistent profits, for example. So always achieving, 2% equity increase on your trades, per day or per week. Learning proper risk management strategies. When do you place your stop loss at above the previous daily candle or the previous 30-minute candle, depending on whatever time frame that you're trading, and when do you trail that into profits? And how do you understand what are the limitations of your trade, so then you're not just holding onto a trade for a very long time, price hits a weekly resistance or support, reverses in the opposite side of your trade, and now you're completely knocked out. So understanding, those clear objectives and measuring your progress along the way. I hope these tips helped, and trading simulators are a great way to get your feet wet, but remember that nothing's going to beat the real thing. So start practicing using a simulator, a good simulator, but be prepared for the emotional roller coaster when you actually start with your live trading. So as long as on these simulators, you have a good trading plan, you have developed good trading habits, you've developed a good trading strategy, you've developed good risk management strategies as well, you're pretty set. But understand that you're always going to have some sort of an emotional roller coaster. We're human. Of course, we're going to feel emotions. But as long as you have your analytical and your data part set and your trading plan set, you're good to go and you're good to at least start getting your feet wet into the live markets.